Hello, hello.
Oh, hey, Sam, do you hear me?
I can hear you now. Yes.
All right, great. So yeah, thanks for joining today.
Of
Obviously, a lot to
course.
talk about. I know that a lot has happened in these last several weeks or so, and you've gone out of your way to speak out and try to piece together exactly what transpired, what you knew when, what could have been done to potentially prevent this. And we're gonna touch on some of that today too. But I also want to kind of dive a little deeper as well into sort of what this says about the crypto industry as a whole, and in particular some of the centralized entities that play important parts of it. So I'd like to just begin by asking for you to kind of give a little bit of perspective here. It's been, I guess, about 5 weeks since all of this started. It's been a little bit
Yeah.
over a month since you resigned as CEO. uh, what have you learned? I mean, what is your yeah, I'll just leave it there.
Well, I've learned a lot. I've learned a lot of things. This shouldn't have been what it took for me to learn. Even if it was. Um, I have reflected a lot on what happens when I get shitty. On what happens when I start to become less grounded, when I start to lose focus and lose concentration on a lot of important things. Um, I've reflected a lot on like people that were hurt by this and on what I can do to try to go some distance towards making part of it up. And I've reflected somewhat on what it means for the crypto ecosystem and what I certainly wish I had done differently, we'd done differently as a business, and you know what that means. Maybe other people could do too. And I think like you know a really huge focus on transparency, on things working exactly as they intuitively should and as they say they do. Having large amounts of data that are easily available and consumable by customers, representing all the core risk metrics. Um, having you know, as many panels of transparency as you can on as many windows of the business as you can, both because customers deserve that and because frankly, that helps. I think that would have helped um, keep me more in touch with what was going on as well. And I think they're doable things. I think they're achievable things. I think in a lot of ways, with some really giant and important exceptions, um, there were a lot of powerful things about what we built about FTX. Obviously, I fucked that all up.
Hmm. Is there anything in particular, specific learnings that you've come across? Again, I know you've been asked this many times, and you often say you wish you had access to more data. Your access to systems was cut off. But I know you've been working the phones. I know you've been talking to
Yeah,
people. I'm sure you've
yeah,
been laying up at night, looking at the ceiling, wondering what the hell
yeah,
happened. Is there
yeah.
anything in particular that you've learned since then that sort of helps kind of put the pieces together a little bit more?
To some extent, and I don't have total confidence in it, but I have a map in my mind of roughly what I think happened. And um, you know, what are the biggest mistakes? There are a lot of ways to view them. And I had to screw up a lot of things for this to happen, and a lot of exogenous things had to happen. But going through a few of those that I now think were deeply related to what happened. One piece of this is thinking about hedging. Um, I think Alameda had a substantially long market position on. I think that position was, the percentage leverage level if it was not very large a year ago, even if the just because the balance sheet was so big then. Um, uh, and I think it was not sufficiently hedged. I don't think it was close to sufficiently hedged, and I think that left it vulnerable in a world in which there was a change in economic environment, which we saw with interest rates rising, money tightening quite a bit, borrowers quite tightening quite a bit and risk assets falling. Um, I think a second thing was, the classic story of the uh, sort of idiosyncratic market crash that specifically targets assets that one party holds. That's what happened with long-term capital management. It's what happened in other cases, and it happened here as well. And part of that means that even when Alameda did have a bunch of hedges on, I think later this year, those didn't do very much in the crash in early November because it wasn't a broad-based market crash. It was a specific crash in assets that Alameda held.
What
And
were some of the specific hedging positions that Alameda had? Because one thing that
yep,
I think most people find frustrating about this market is how highly correlated it is,
yeah.
and we've learned time and time again that trying to put on positions to offset risk might displace it a little bit, or really just does not actually do what it's intended to do. So what were some of those positions?
So, I don't have the exact ones before me, but I think basically, combination of like very liquid crypto assets, very liquid real world assets, like, basically things, uh, top tokens, stock market indexes, was I think basically what it was comprised of. And, to give like some I'll see if I can pull up these numbers here, but over the first few days of November, you saw a 50 to 90% decrease in the price of the assets that Alameda held, and something like a 0 to 15% decrease in the price of the hedges that it had on. And so it didn't come close to hedging, that risk. And that was something that, was another risk that I think was substantially underestimated of, idiosyncratic market moves that don't uh, look like traditional broad-based economically or monetary policy driven market moves, but are in fact related to, the company itself. So that was, one of the problems. Um, Another problem is like I just like, there are things that at FTX we built out really good dashboards for views for, tooling for spreadsheets that monitored, and volume is one of those, like, volume by client, by jurisdiction, by a lot of other things. We didn't have that for risk. We didn't have that for like position risk. We didn't have that for margin risk. We should have. That would have probably flagged a lot of what happened a lot more
Mhm.
clearly. Um, and I mean, in retrospect, obviously we should have had that. Like in retrospect, you know, I mean, we're applying for a CFTC license and building out lots of systems for that, which would have helped here quite a bit,
Mm.
frankly.
Do you
Um,
think that Alameda specifically was targeted? I know that you've said in some recent interviews that there was a concentrated PR campaign against you.
yeah, yeah, I think it was. I think it absolutely was. Now, I also think that's not that much of an excuse because, like, you know, I absolutely should not have allowed FTX to get into a position where it was vulnerable. Like that was a huge, huge mistake on my part. But I do also think it was the case that that there is a targeted attack.
Okay. One thing that I am curious about, because you've also said multiple times that you kind of feel that you became ungrounded. That
Yep,
I mean, you started buying naming rights to stadiums and sports teams, and I guess a proposed $100 million sponsorship deal with Taylor Swift, which led to some jokes that she has better due diligence than some VCs and institutional investors. But that's a different story. But I am excuse me, I am curious too, because you are an effective altruist. I assume that you still are, and you very
yep,
publicly adopted the role of earning to give. And
yep,
it seems like for that excuse me, it seems that for that type of role, you need to have very strong discipline so that if you actually are successful at earning, you keep it long enough to do the giving. And
yep.
I'm just wondering how do you think that these different delineated roles in that this type of Silicon Valley philanthropic type of approach is achievable, or like how ethical is it to try to make money in as much as you can in almost any way possible? It's putting a lot of trust into those people that they're going to end up doing the right thing and not taking on too much risk.
I think the devil's in the details there, and like, I think it is doable. I think it can be a model that's incredibly effective and good for the world. For that to be the case, you have to not screw it up, and I, it's, I, I don't think it's a failure in the high level model. I think it's a failure in my implementation, and I think like that's entirely on me. And as you said, like it's this didn't serve anyone well. This was bad from everyone's perspective, and obviously most of all from customers' perspective. But I I but like I didn't make out well from this. Like the causes I was supporting didn't like. This is a failure on every front.
Okay. So I do want to ask because you've also been very public about sort of your uh, how upset you are with the way Chapter 11 is going forward. You've mentioned that, like for instance, FTX US, you consider to still be fully liquid and solvent, and could
Yeah.
turn on withdrawals tomorrow if they wanted to.
Yep.
I'd like to get your overall assessment of how the current leadership is prosecuting this, but also I am curious too. I mean, you've said multiple times that you really did not have a handle of the financials of the company and what money was where and who owned what. So, assuming that magically you got implemented back into CEO as tomorrow, do you think you would be better at trying to unwind the company than John Ray is, or I mean, what how would you be better at this than a trained and experienced team of executives that specialize in this very thing?
I totally hear you. And so giving a few and there are a few things going on there. The first is, how are things going today? I mean, I don't know for sure, and obviously maybe there are great things going on that I'm not seeing. Like that's obviously a possibility. Um, I can tell you from my perspective, from what I've seen, um, I've heard from many people that there are a lot of really great people who are working on the Chapter 11 team right now, who are putting in long hours to try as hard as they can to do what's right here. And I'm incredibly grateful for that and for them, and for them taking on this responsibility here. I think uh, you know, uh, yeah, it's just like think that's great from every perspective. They also have a really hard job, because they're inheriting a company which is a really complex company, it's a global company, um, and trying in short order to understand all of it and piece it together, and they're doing that as far as I can tell without any of the help or support of any of the people who knew how the company worked. Um, and that's not just a hard challenge, that's an impossible challenge. I don't think that needs to be the challenge. I think there are ways to work constructively together, where, I've seen statements made in filings of the form like, XYZ didn't exist, where it absolutely did exist. I would have
Such as
known how
what?
to get it. So, I mean, you look at things like, a record of the top 50 customers. That would have taken me, 90 seconds to get. That's not like, there are a number of things that have appeared in filings, data requests that are just not hard to piece together from the context of like, a team that knows that company well. But I think if you're missing that context, it's incredibly hard. And if you're missing that context and shut down all servers and data, that sort of like ties your hands behind your back further. And so I think this is like certainly not the easiest version of that could have been done. And I think that has frankly been detrimental.
Mhm.
And I think that's led to a much clunkier process than needed to be. And I don't think this is the fault of most of the people who are a part of it because they got thrust into this. Um, The Chapter 11 filing, I think, was problematic from a number of perspectives in the first place. And I was uh, done on an unreasonable time scale, unreasonably fast. Um, and I bear some responsibility for that, absolutely. Um,
So who
I
actually? Sorry to interrupt, but I
Yep,
mean, you were the controlling shareholder in
right,
FTX. Nobody um, could actually force you to resign or file if you didn't want to.
right.
You've said that you've gotten some bad advice in the past. I mean,
Yep.
what was the deciding factor so that late at night, 4:30 in the morning, you finally clicked yes and decided to file?
So, two things. The first thing I'll note is I did not file for Chapter 11. I did, um, I put Mr. A in charge of some of the businesses. But I did not at any point believe it was appropriate to, for instance, have FTX US in Chapter 11. That's a fully solvent company. That never should have been. I was not expecting it to be. I'm surprised at how that ended up. And confused. Um, I but in terms of why I did what I did, I mean, I certainly regret how I did it. I think it was an incredibly messy process, and I think it was not thought out well. I was under a lot of pressure to do it. I was getting a large number of messages that were, I felt at the time and think now, fairly inappropriate and manipulative. Um, but fundamentally, like, I shouldn't have been susceptible to that. Like, I should have been in a position where I was able to, navigate that for myself. Um, and I think, frankly, like, it was a really stressful situation. I got some very bad legal advice.
Yeah. Can you share who? I mean, these pressures, this legal advice. I mean, who actually applied that pressure? I mean, who was the winning voice here for you?
Uh, well, I think you can look at who ended up um, directing what happened, after the filings. And I think that, um, I think, frankly, there were a lot of lawyers involved in that process. Probably too many lawyers. I don't know, some things I didn't know until well after. I didn't realize until fairly recently that in the Enron bankruptcy, I guess the total legal fees charged of the estate
Mhm.
the by various lawyers were, I think, $700 million or so. Um, I think that, like, um, I, I can't speak to motives,
Yeah.
um, but there were some law firms whose names I'm not going to name right now that certainly gave me very bad advice. That certainly reneged on agreements that were explicitly made in ways I don't know to be legal.
Yeah.
And I certainly acted in quite bad faith there.
Let me
Again,
ask you
I say
this.
all of this, but, like, it's on me that I
Mhm.
fucked that up.
Let me ask you this then. Did any
Yep.
lawyers suggest that you may face uh, or less legal jeopardy if you were no longer CEO? If you resigned, did your
Yeah.
potential future factor into that?
Some people said that that was the case. I generally responded by saying that that wasn't what I felt like mattered the most there, and that that was not the right thing to be focusing on. But I guess at the end of the day, um, I I got a lot of pushback on that, and I mean, I asked myself a lot why I cared about that pushback. A lot of the pushback was that this wasn't the right thing to do for customers necessarily, but that I was dumb to think about that and that I should just be thinking about myself there. It never felt right to me.
Mhm.
I Different people are taking different approaches. The arguments were a little all over the place for me to do it. And ultimately it's basically all coming from a series of a tight-knit group of
Mhm.
lawyers and law firms
Yeah.
that were coordinating with each other, I believe, on that
Yeah.
messaging to me. But, uh, but I think, I'm not even sure they're locally right on their claims, and I also continue to think that that's not what mattered here, and what mattered here was, like, whatever had the best chance of making customers whole.
Okay. One last question on this, and then we'll move on. I'm just curious, what advice your parents were giving you during these few days.
Mostly they were trying to be supportive as best they could and support what I ended up, support what I did, whatever it was. And, um, I mean, they've been put in an incredibly difficult position here through no fault of their own. And yeah, I don't know, grateful for the support they've given. But at the end of the day, they weren't pushing me one way or the other.
Mhm. Any legal advice, or was it mostly just support?
It was mostly support and counsel, and um uh yeah.
Okay. So one of the details that you've shared is that I think it was something like 8 minutes after you signed the papers, you got a multi-billion-dollar
Yeah.
funding offer. Uh,
Yes.
I'd love it if you could share the names of any of these companies or funders that offered to help
Yeah.
recapitalize the firm.
I don't have permission to do that. I'm gonna see if I can get that permission. I don't currently have it, but yeah, I did get that. And I mean, frankly, I gotten multiple multi-billion dollar, um, seemingly fairly serious funding proposals, um, including multiple since after the crash, and many, you know, or multiple since after the filing, and many after the crash, but before the Chapter 11 filing.
So let me ask you
It was,
this. Oh, sorry,
yep.
go ahead.
Oh no, go for it.
I was just going to ask, can you share if they were current investors or new sources of capital?
Uh, I mostly they're not current investors. Obviously, I was talking to a lot of current
Mhm.
investors, but most of it was new sources.
Okay. And just to maybe just get a little more detail, if we can, on what some of these were.
Yep, yep.
What were they looking? Was this an equity investment? Was this some sort of debt instrument? How much equity were they looking for? Or what role would you have in the company? Like, were these offers contingent on you staying as CEO or leaving as CEO?
So, I there's a variety, but I think the most typical type of offer was something like a convertible. I think like the most typical type was something like, you know, debt in the company which would convert to equity under various circumstances. Um, and I mean they're fairly favorable to the investors as is appropriate there. This was a case where we were beggars can't be choosers, so to speak. And in terms of myself, like I can't speak for them, but if I had to get a sense of where most of them were at, I think what I would say is that most of them were envisioning a world in which I was still involved with the company and I was still helping and I was still pushing forward, but in which there is also more oversight than there had been before, and that there was, much more transparency, that there were more people over, checking what was going on. And so, to my knowledge, I think that's what most of them were looking at, scenarios where, I was involved but with heavy oversight.
Okay. When you say involved, do you think that means as CEO or as perhaps like more like an Adam Newman type of deal with WeWork, where he negotiates a favorable sort of golden
I
parachute and
I
is an
don't think it would
advisor?
be the latter.
Okay.
I think it wouldn't be the latter for multiple reasons. Um, but in terms of titles, I don't know, and titles have never been what I've cared about in the first place. Um, I, they're just words at the end of the day. But it's a good question, and in many cases, it wasn't discussed. In some cases, it was discussed and left unclear. Um, and if I had to sort of, I don't know, like I think some variants on this were like, that I have some senior role there, not just an advisory role, a real role, but
Mhm.
that there is at least one person with a role that has oversight of my role. And different people had different formulations of that. And there are a lot of ways you can construct that.
one very public offer that came was from CZ at Binance. Do you think that his offer was legitimate?
No, no, I don't think it ever was. I obviously
Why
don't
do
know
you
for
think that?
sure, but so I mean, well, looking back on it, like there were a lot of signs that this was maybe not a bona fide offer. One is he cared surprisingly little about the terms. Um, it's just like, yeah, sort of like, yeah, a billion here, a billion there, who cares on what the terms of it were, which, maybe you could take as a sign that he wasn't expecting those terms to matter. Um, and uh, and I also think it just sort of like fits with, in general, what I think his approach was here. And so I don't know for sure. Maybe I'm wrong. But uh, I did not get the impression that it was bona fide. And I mean, we found out that they were pulling out via their tweet about it. We were not separately informed of that.
If you didn't think that it was legitimate, I know you've said beggars can't be choosers, and you were in a dire
Yep.
circumstance, but uh,
Yep.
why did you sign the LOI? Could that have potentially turned off some of these other suitors that you may have been speaking with at the same time?
Yeah, maybe I shouldn't have. At the time, I was hopeful that it was real, and a lot of people really wanted it to happen. And I felt like it was worth a shot, and we gave it a shot. We gave it a really good faith effort. We tried as hard as we could that day to get as much information to them as we could and to be as cooperative as we could. Um, in retrospect, was it just a waste of time talking to them? Yeah, probably.
Mhm. When's the last time you spoke with Carolyn Ellison?
Oh, I think it's been like a month.
I'm curious because there is a feeling out there, even though CZ has denied it, that he kind of played you. I mean that by
Oh, yeah, he
using
did.
the FTT leverage, it was part of a plan to sink FTX. I'm curious your thoughts on that, and also I'd love to get a reaction from you when Carolyn mentioned that she tweeted at CZ that she would buy any amount of FTT from them at $22 a token. What did you think? Did you realize that she perhaps showed her hand with that tweet?
So, um, so in terms of uh the CZ angle, obviously I can't know for sure, but like my guess is he played me, he played it well. I think he probably did better than he thought he would. Like I don't think he thought this was gonna be the outcome. I think he thought it was gonna be damaging, but not this damaging. I don't know. I'm guessing he's happy that it was. I can't know that for sure. Um, I but he played it quite well over the last couple months.
Mhm,
Like I uh in real time was seeing what he was doing, but was not. I was not good at predicting what his next moves were going to be,
okay.
and he had a far more carefully thought out plan, I think, than what I originally thought he would have, and um, I think, well constructed, and obviously quite effective.
Mhm,
I, in terms of showing the hand with the tweet, I don't know. It wasn't how I interpreted it, but like obviously, other people didn't interpret it the same way I did. So, um, maybe like my thought on it was just like that's the efficient thing to do. Like, it's if CZ says, look, he's worried about the impact of selling this out, then just do an OTC trade. Like, it's a lot cleaner.
mhm,
And I think there's a little bit of calling his bluff on that. Because I think if he actually did just want to sell out in an efficient market way, he should have really liked that OTC trade idea. And I think the fact that he didn't was maybe some evidence that the PR impact was the goal.
mhm. What do you make of some of these allegations that have come out that you were shorting Tether, that you were trying to manipulate the price of Luna in an effort to save the company?
It's fucking ridiculous. I mean, look, I fucked up a lot of things. Like I just absolutely did, and I deserve a lot of shit for that. And I like, I mean, yeah, it sucks. I feel incredibly bad about all of that, but also like, I there are a lot of things I didn't do as well. Like I, you know, it's sort of open season right now for conspiracy theories. And like the shorting tether thing is ridiculous. is a $500,000, $250,000 maybe short position, something like that. That was claimed to be um, uh, uh, me trying to tank the price of Tether, and there's so many things wrong with that theory. Like, first of all, $250,000 is nothing to the price of Tether, obviously, and I would know that. Second of all, I wasn't even doing any of this. I was like only even vaguely aware anything was happening. Third of all, why would I want to be tanking the price of Tether? That makes no sense. Like, I think the claim is I want to tank the price of Tether in order to tank crypto prices. That seems like not even the right direction. Like, I don't even get the theory for why I would want to be doing that, let alone like actually doing it then. And like I had so many things going on that day. Like, boy, did I not have the brain space to even try and come up with like a wacky plan, you know, let alone the fact that I wouldn't do that and didn't want to, and it wouldn't be effective and didn't make sense. And you know, I think right now it's just like people have realized that they can get clicks for saying mean things about
Mhm.
me, and like, yeah, I deserve that in general, but like I sort of wish that it stuck more to the things that I actually did screw up and not like, uh, not just like random ass
Mhm.
like problems with the world or non-existent problems with the world that are
Mhm.
like being retroactively blamed on me with no evidence.
Okay. So I want to just move forward a little bit. I want to talk a little bit about FTX's approach to regulation and
Yeah.
compliance. And I just one of the statements I think he gave it to George Stephanopoulos that you spent zero time doing compliance and risk management was really kind of stunning. And I'm hoping you can maybe just shed a little bit more light. I mean, in a survey response that your legal team gave to us back in August, we know that you have a 72-person compliance team.
Yep.
What were they doing? Like how and
So
how did none of that funnel up to you?
so I did spend a bunch of time on compliance, I think. I did not on risk management. And I think like, I was spending a lot of time thinking about regulation and thinking about how to comply with regulations and thinking like I was very heavily involved actually on that side of things. Now there's an enormous amount going on also because there are 200 jurisdictions in the world. And so there are a lot of things that like other people were doing as well and I was not involved in on the compliance side. But I was putting a lot of time in there. But risk management, I was not putting much time at all into.
Did any regulators ever ask about margin positions on the exchange or uh, how you keep track of that?
So I think and I don't know the details of this, but I think in some jurisdictions we had reporting actually around that, where we would give, I don't know if it's daily or some sorts of periodic reports to the local regulators of, and it's different from jurisdiction to jurisdiction. It's just like, it's different. It's different in each country, but in some countries, yeah, we did have reporting requirements there, and I think frankly that those may have come out better than other jurisdictions. I haven't done like a super careful survey of that, but I do think that like there is potentially value to that, and
Mhm.
that's a healthy thing and something that frankly, um, I think kept um I kept the exchange in those jurisdictions more I ground is not quite the right word, but um I force it to be on top of its shit. Um, but it was not in general the question that we got a ton of. Like it came up in some jurisdictions, but it frankly wasn't the type of thing that we got asked about the most. Like
Can you share
internationally,
which
like
jurisdictions were the ones that were
yeah.
on top of it?
So I mean, there's a lot of like random regulations in different jurisdictions that would come up, which just didn't even have analogs in other jurisdictions. And so questions of like what the notification process is for a margin call is like a thing that mattered for some jurisdictions. Questions about a lot of questions about the phrasing of various things, like if you use this word, then it counts as marketing, but if you use this other word, it doesn't. Like that's the kind of thing that would come up a lot. And so, like there would be questions of like, was a product being marketed or advertised in a particular way or jurisdiction, or was it being passively discovered? And we
Mhm.
spent like an absurd amount of time,
Yeah.
um,
I'll get to
like
that
determining that.
I'll get to that stuff in 1 second because I do want to ask
Yep.
about it, but it's strictly related to margin because that seems to be the crux of everything.
Yeah,
I mean,
absolutely.
can you share which jurisdictions were the ones that required like regular reporting on margin positions?
So the ones that I'm aware of are, well, the United States with FTX US derivatives, and I believe Japan as well. And there may be one or two more. I'm not confident. I know we had some reporting in Australia. I don't know the details of it. Um, but I am certainly aware that in FTX US derivatives did, and I believe FTX Japan did to the JFSA as well. I will note that uh, I believe that FTX US derivatives, in fact, all of FTX is fully solvent and fully backed, and all customers could withdraw tomorrow if that were allowed by the operators of the exchange. And that FTX Japan, I also believe, to be fully solvent and have funds necessary to make all Japanese customers whole as well.
Okay. Was there ever a discussion about because clearly, I mean, you've said again in previous interviews, your dashboards really focused more on trading volume and revenue,
Mhm.
but clearly you built these products, at least for some entities, to be able to
Yep.
keep a finger on the pulse of margining. Was there ever a discussion about applying it to the wider company?
So, okay, that's a really good question. Because obviously the answer kind of should be yes. Like, certainly when you phrase it that way, like, I I feel like obviously I should be saying yes. Like, I should be living in a world where yes is the answer I give to that. Um, uh, I'm not sure I'm actually living in that world though. And to give maybe a little more color on that and how could we end up in that position? So there were an enormous number of things that we did for regulatory purposes, just like a huge, huge swath of things. And um, many of them, frankly, were kind of dumb. Like many of them served no clear purpose, kind of for the world. And I we just had to do them. And some of them were actually like clearly counterproductive. Like
Like
we
what?
would sometimes have to like there'd just be like some weird regulation in some country that like you have to liquidate a user under conditions X, Y, and Z, even though that user was way above water and like no reason to liquidate them. It's just like, I don't know, it's the third Wednesday. I mean, it's obviously not quite that dumb, but like there were things that made no sense. And then there were a ton of things that were just like fine, like nothing was wrong with them, except that they were just slightly different than what every other jurisdiction required and no better or worse than that. But we then had to build out a whole new system for those. And so we spent a huge amount of time building those out, and it's like half of our engineering time. And one example of this is just like KYC onboarding. Like each jurisdiction has like slightly different requirements for like what you have to ask when from a know your customer perspective. And so like, we would get the requirements from some jurisdiction, be like, oh boy, like they want to see a proof of address which is no more than 6 months old, and it can't be a bank statement, it could be a utility bill, but like not for a hot water heater. And like then we'd have to go like tweak our basically tweak our KYC procedures for that jurisdiction. And these were all sort of dumb from or many of these were dumb in that they sort of like they didn't like make sense. It didn't seem like they're making the world better. It didn't seem like they're helping anything. Um and and we were kind of grinding through many of them because there's a huge load of them. But in in that giant basket of regulatory things we had to implement, some of them actually made a ton of sense and would have been like super healthy for the
Mhm.
exchange more generally. And I think like, you know, having like a real time, easy to read and parse feed of margin positions is like an example of such a thing.
Mhm.
And I mean, so my unsatisfying answer to your question is to some extent, I think we got so lost in the giant sea of random nonsensical changes that we had to make from jurisdiction to jurisdiction, that we didn't stop to think very much about like which of these would actually be like really healthy for us to implement
Mhm.
everywhere, and we separately would think about which things were healthy to implement everywhere, but we sort of didn't combine that with the regulatory aspect
Mhm.
um,
I want
of it.
Sure. So I want to ask a little bit more about your approach from jurisdiction to jurisdiction. We spoke, I believe it was last August, August 2021, where I think you told me you spend like 5 to 6 hours a day just working with regulators, and
Yep,
we're all in various stages of building out the frameworks. Some of them have existing frameworks. Some of them are trying to find ways to
yep,
apply
yep,
non-crypto frameworks to crypto. Some are trying to build ones bespoke for crypto. And and it's not just you. I've spoken with CZ about this, and obviously anybody that follows the news knows that crypto companies, through their lobbying activities, are working hard, especially in the U.S., to try to craft crypto regulation. I'm wondering how healthy you think that is in a market like this, or in any emerging type of technology. Like, what's the best way for industry to work with the public sector so that they can craft regulations and also keep guardrails on companies, frankly, such as yours, so that they don't take this ask for forgiveness, not permission approach, and then end up taking on too much that
yep.
they can handle. And then we see a big collapse like this.
Yeah, it's a good question, and there's no there's no I don't believe that there exists a one-liner that gives the right answer. I don't believe that the answer is all the way in one direction or another. Obviously, some people disagree with me on that. Who knows? Maybe they're right. But my belief is that and that like regulations coming one way or another. That's inevitable. So it's not even a question of if, but of how and when. Um, and I do think some regulation can be healthy. I also think regulation can be very unhealthy. And so I think, sort of the dumb lame answer to that is like, well, we should be trying to figure out how we can have, more of the good regulation, less of the bad regulation. And, what does that actually mean? Um, it means trying to be really thoughtful about like, each piece of this. Like, is this piece something that is important for protecting customers? Like, is it serving a really useful role here? Or is it just kind of going to slow down and inhibit commerce with no gain? And, obviously, if it's the former, then that's a lot more appealing than if it's the latter. And so I think some of it is like, um, basically thinking about, yeah, about like, what are the core things that we're actually trying to solve for? Like, what are the changes that would be healthy to make? And how do we get those in regulation? And how do we get rid of all the things that aren't purposeful?
Mhm.
And so, I think that like the kind of things a customer should want from their exchange, right, from a customer protection point of view, are the kind of things that I think you should have regulatorily um, mandated, and the kind of things that make the customer experience worse and more awkward and don't actually protect them are the kind of things that you should like try very hard to remove because otherwise you're going to end up in a world where it's only the non-compliant exchanges that people will actually end up using, and so there's a balancing act there, and it's not super clean or simple. But I think it all comes back down to at the end of the day, like think about what's good for users. Think about what
Mhm.
users want and like optimize for that. And everything else, should follow from there. And any requirement should be justified.
Mhm.
Any requirement that you're adding should be a requirement that, you have a reason for why this is being added. You have something it's trying to fix, something it's trying to solve, a specific serious worry that it's addressing, rather than, I don't know, we often ask for this type of thing or something like that as an explanation.
Okay. We have about 10 minutes left, so I want to talk about your investors and what role
Yep.
they may or may not have played in the buildup of FTX. You've raised billions of dollars in capital from blue chip firms, major institutional hedge funds, and also a number of prolific crypto specific firms. Uh, can you give us some color as to what some of those pitches were like, and I'm like, how what were some of the hardest questions that you got asked? Did they ever worry about how you tracked margin positions, or were they really just focused on growth metrics?
It's mostly in growth metrics, and I think a lot of the context there is from the VC perspective, what matters is the upside, right? Like you're making an upside play in the case where something goes really well. And the case between, usually the difference between something going like, you know, 10th versus 30th percentile is actually not that big because both of those mean you get basically nothing at the end. Like those are both a failure. And what you're really trying to optimize for is like, maximizing the odds of getting a, 80th or above percentile outcome. Obviously, it's not binary. Obviously, actually, what you're doing is weighting all these, but whatever to first order. That's sort of like how I think about it. And so I guess from that perspective, like, um, uh, they really, most of it was them asking about the upside cases, and I think that makes sense. I'm not surprised, and I think it's fits with their role. And so the hardest questions that I got, I mean, honestly, like the hardest questions were like, hey, it looks like your growth is slowing down in this area. Why is that? And like on the one hand, it's a really hard question to answer because it's hard to explain a negative. Like, I'm not trying to explain why something's growing. I'm trying to explain why nothing weird is happening or something. But on the other hand, we'd always seen ourselves as a very high growth company. And when our growth did slow down in some areas, like, I think honestly, some of my answer and response there was like, geez, I don't feel good about the fact that our growth is slowing down there. I do think that's a problem, but I kind of don't know how to respond to it um because part of what I'm feeling is like I don't know, we're still trying to do good things. I kind of don't know why it's not growing. Like it's not an easy question to approach. I think in retrospect, I have clearer and cleaner answers to that than I did at the time. Like I think in retrospect, and I think I probably could have this is I think a little bit related to me getting less engaged and less grounded is like probably the most like the strongest and cleanest example of this is matching engine throughput. Um, in late 2021, it started to become the case that during large market moves, um, the rate limiting factor on our volume was not demand to trade, it was how many orders per second our matching engine could process. And whenever you're in that situation, like something's gone wrong, um, because that means that for technological reasons, you're not growing as much as you could be. And so, that started being a problem then. And um, that is what it is. Like, that happens. That's not shocking. The bigger problem, or a big part of the problem, is that should have meant that by February we had tripled matching engine capacity and alleviated that problem. And I think had we done that, we would have seen much stronger growth across institutional firms in 2022. Instead, it was sort of I was vaguely aware, maybe more than vaguely aware, that like we were more rate limited than many of our competitors were. I'd sort of like poked a few times, hey guys, we should really work on this. So like, yeah, we kind of are, but it's hard, you know. And I just sort of let it fester like that for a while. And then finally in like summer or so of this year, uh, we sort of sat down and said, all right, guys, no, seriously, this is like one of the most important things. We got to get our shit together here. Like we have to start increasing match engine throughput because this is actually the biggest rate limiting factor for growth of the company right now. And then we finally did. So
Oh,
I say we, it was the developers, not me, but we then did triple capacity over the next few months. But I think if I'd been more grounded, And more on top of my shit, that's something that we've gotten done in February instead of in, September.
Okay. We just have a couple minutes left. I'm just one last question on investors, and I'll get to my final ones. Did
Yep.
did any of them really ask about compliance and risk management in any material form? I mean, just a yes or
Oh,
no would be great.
uh, absolutely on compliance. A ton of questions on compliance. Risk management, yes, but not in depth.
Okay. So I want to just ask you about FTT. You have
Yep.
said that you actually think FTT has more intrinsic, or I guess had more intrinsic value than a lot of other crypto tokens out there, and a lot of
Yep.
your entire empire was built on FTT. Uh, what do you think its sudden collapse means for the utility of crypto exchange tokens and the future of other exchanges that employ similar tokens?
I think it doesn't. So I still think exchange tokens are great. I think that they're like a really cool asset and technology. Um, I also think I say obviously, but like whatever. I didn't think about this well at the time. That they're correlated. They're super correlated with the exchange. And so like, is that exchange token going to crash at the same time as when it's incredibly hard to get financing for the exchange? At the same time as when there's a run on the bank? At the same time as when there's negative PR? At the same time as when every other possible negative thing is happening to the exchange? Yeah, probably. And so I still think they're really cool, but I think you can't use them as a backstop. Like it can't be a rainy day fund. It can't be because on the rainy days when it's worthless. And
Mhm.
so it's an upside tool and an incentivization tool and community participation tool and a cool financial tool and a lot of other things. And anything can be a great thing, but it shouldn't be a safety valve. It
Mhm.
because it goes down at exactly the wrong time for that.
And I mean, when we spoke, I guess somewhat ironically, back in July of this year, you told me that there's many crypto exchanges out there, third tier ones in particular, that are secretly
Yep.
insolvent. I don't
Yep.
imagine you thought you were speaking about yourself at that
No.
time. But
No.
I mean, how safe do you think this entire crypto ecosystem is right now? Is there anything you'd like to do to add on to those comments or clarify them? And what are some signs that you think investors and traders that have money at plenty of other exchanges around the world should be thinking right now and checking them?
So I don't know for sure. I I don't see there aren't other problems I know of that I know will bubble up. In fact, the things that I had on the back of my mind when I made that comment, some of those have already come to pass and came to pass shortly thereafter.
Mhm.
And so I don't have like a big store anymore of like things I'm worried about. Um, I think I mean, ask all the questions you wish you'd asked FTX is part of my answer to that question. Like, force them to ask the questions I should have to answer the questions I should have answered. Um, I think uh that uh I don't know a reason that this couldn't be the nadir, that things couldn't start recovering from here, but maybe there are things I don't know about.
Mhm. And I think just last one because we're just about at time. You're testifying, believe it virtually, at
Yeah,
Congress tomorrow. What are you doing to prep? And are you worried about a criminal indictment? Are you preparing for that in any way?
I'm writing up a lot of documents to prep. I have let me see how many pages I have right now. I have 22 pages right now of prep material. Much of which will probably end up being my written testimony. So I'm uh this is absolutely a case where I'm going to be doing a lot more prep than I usually do for these. I haven't started thinking about like trials or anything like that. There's going to be a time and place for that, but like I right now I'm just focused on like what I can do to try and get value for users. That's like that's what I feel like I like have a duty to be
And
working on.
just very last thing. Uh, I know you say you're going to try to do what you can to recover as much value as you can for consumers. Do you
Yep.
think you're done with crypto after this, or would you potentially, if given the opportunity, try again?
It's all going to depend on the opportunity, what the ecosystem wants. I still think crypto can be awesome. I wish that I had done right by the ecosystem. Um, but I still appreciate it, and I still think it's a great technology. I still think it's super useful. I still think it has a lot of growth potential. So, if the right opportunity was there, I, from my perspective, would be excited to you know, follow up on it. Um, but I don't know that's a decision that I'm going to be the one that gets to make.
Okay. And what do you think your legacy will be?
I mean, I hope it's anything but what happened last month. I worry that that's what it will be, and I think that is what it will be if I don't do anything to make it up.
Okay. All right. Well, Sam, thanks for speaking with us. I appreciate you answering all the questions, and we'll continue to follow what happens and follow your testimony tomorrow in
Thank you.
Washington.
Thanks.